I just think that we're so early in the ecosystem. What's going to happen across not just Bitcoin but the rest of DeFi? It's really hard to fathom what's going to happen in 6 months to a year. It's more about like how can we continue to race to support all that development that's out there. And so when people say like, oh, I think it'll be, which is like, hey, gold is worth this much. Okay, well, like it could, we could be, 100x, 1000x more of that in terms of like what the value of all these assets are going to be.
Alrighty, what's going on, everybody? Welcome back to another CYPRX Wealth 28 Club podcast. I'm your host, CYPRX, here with my co-host, Mr. Aquaman. In today's episode, we're going to be diving into how the regulatory environment around DeFi is evolving, and is evolving fast. Financial institutions are no longer just watching from the sidelines. They are actively, if not participating, then they are 110% paying attention. That means now is the time to focus on projects built with regulation and compliance in mind and embedded into their infrastructure. As we move into the next few years, heading into the 2030 agenda, we're going to see traditional finance and DeFi begin to merge. It's already merging as we speak. And so for those who take the time to learn DeFi strategies and align with compliant projects, the opportunities ahead are going to be massive. They're going to be monumental. So with that in mind, I want to start off with this video clip. This is from the Wyoming Blockchain Symposium that took place 2 days ago, live streamed day one. We covered this in a live stream this past week, but this is one of the co-CEOs of Kraken. And listen to what he goes on to say about how massive the potential is, where we're currently sitting at in the DeFi ecosystem now compared to where we could go in the near future. This will just set the tone for today's video breakdown surrounding how I introduced today's podcast, which is that you guys should be paying attention to DeFi opportunities. If you're not already actively participating, then at least at a minimum, go out and start educating yourself on the potential that your digital assets have, instead of just sitting idle in your crypto wallets doing absolutely nothing. You guys could be massively, capitalizing on passive income. Again, not financial advice. There's obviously, of course, risk involved with that, but just educate yourself at a minimum. There's no risk required to educate yourself, to read documents, to watch panel discussions, to join communities like ours, to, really understand the DeFi ecosystem. Does not require that you go out there and expose your crypto. It just requires the willingness to learn and expand your way of thinking and understand that this digital transformation is happening with or without you, and DeFi is going to play a massive role in it. So listen to what this guy here says.
And there's a set of folks that are still building on top of it, right? So there's this new meme generation that's happening on Bitcoin, but that also means that there's new types of technologies that can be built on top of it, then bridged against it, new sources of liquidity. I just think that we're so early in the ecosystem. What's going to happen across not just Bitcoin but the rest of DeFi? It's really hard to fathom what's going to happen in 6 months to a year. It's more about like how can we continue to race to support all that development that's out there. And so when people say like, oh, I think it'll be, which is like, hey, gold is worth this much. Okay, well, like it could, we could be, 100x, 1000x more of that in terms of like what the value of all these assets are going to be.
Yeah,
What
bro, I love it.
He just said 100x, 1000x.
He said that right now, compared to where we're at, he sees that we could be 100x to 1000x in the future compared to where we're at today. That's the opportunity that sits right now for everybody that locks in. And this is not just coming from some random person, right? This is coming from the co-CEO of Kraken. So
yeah, dang. That's exciting.
Super exciting. And, at the end of the day, it might seem a little hopium, but, this is not us saying that this is going to happen tomorrow, because it's not. But over the next 3 to 5 years, is it likely that we're going to see massive growth potential compared to what this gentleman's here talking about? Absolutely, 100%. When more institutions pile in, it's coming. It's just a matter of regulation, compliance, and all of that is being laid right now. That foundation, that infrastructure is being built out as we speak. And people that choose to ignore it, they're going to really regret it in 5 years looking back. That's all I'm going to say, So transitioning over, because I really want to focus on the regulatory shift that's taking place. What I really want to focus our attention on today is how these institutions are 110% aligned in themselves with education around staking, liquid staking, looping strategies, and really expanding their yielding opportunities within the digital asset ecosystem. I said here in this recent post, and we're going to play a couple of video clips from this panel discussion, but I said, if you're not paying attention to liquid staking and how fast the institutional money is going to pour into these projects, once the infrastructure and regs are clear, you should be. And so for anybody that doesn't know, August 5th, 2025, Commissioner Hester Pierce, along with, the SEC chair, Paul Atkins, completely changed and shifted their tone, not only on staking, but also the guidance around liquid staking and the yield that we're generating from staking and liquid staking. And the SEC pretty much classified staking, liquid staking, and the yield rewards that we're earning from both, participating in staking or liquid staking as non-securities, which is huge, an absolute game changer. And that happened just within the last 30 days. Okay, so now moving forward, we have to understand that there has been verbal clarity, right? And so what does that landscape start to look like? Because prior to the last 30 days, everybody that has been opposed to DeFi has this, oh, I don't want to touch DeFi because it's not regulated, mindset. But now that's changing. So what's your excuse? So I just want to read this for you guys so you understand the landscape and where we're currently at. Again, this is a verbal clarity. It's not written clarity yet, but I have a firm belief that based off of what we're seeing and the shift in tone and sentiment from financial institutions, there's something cooking behind the scenes that is going to come much faster than most people think. So this is the staking sequel comments on Division of Cooperation Finance's statement on certain liquid staking activities from Commissioner Hester Pierce herself from August 5th, 2025. Just skipping down here to the meat of this, it says, commercial market participants in the on-chain economy also have discovered the benefits of receipt instruments. Participants in proof-of-stake networks stake their crypto assets to smart contracts and delegate or some other system to support the security and censorship resistance of these networks. In doing so, they lose the ability to transfer the crypto assets until such assets are unstaked, a process that can take days or even weeks. A person who stakes her crypto assets through a liquid staking protocol or provider, however, receives a liquid staking token, or LST, that demonstrates legal and beneficial ownership of the staked crypto assets. The LST, or again, liquid stake token, enables her to transfer her staked crypto assets to another blockchain network, address immediately without unstaking her crypto assets, which reduces unnecessary transaction costs. She can use the LST. Again, I repeat, she can use the LST. This is coming directly from the SEC, by the way, telling you that this lady, in terms of this example, can use her LSTs as collateral or to participate in the crypto allocations, which can generate a return. Today's statement clarifies the division's view that liquid staking activities in connection with protocol staking do not involve the offer and sale of securities. Instead, it is a variant on the long-standing practice of depositing goods with an agent who performs a ministerial function in exchange for a receipt that evidences ownership of the goods. So again, like I said, this is verbal clarity that participating in liquid staking or staking is not classified as a security. This is huge. This is a shift in the regulatory undertone compared to what we've seen in DeFi over the past 4 to 5 years, right? So I don't know if you had anything to say on this one, Aqua.
No, this is just massive, and this is just another reason why you shouldn't fade DeFi. You shouldn't put it on the back burner. You should be paying attention to this right now, and you should be somehow, some way, establishing a long-term game plan that has DeFi involved, because that's how you're going to really hang on to your digital assets for years to come.
So within the next couple of video clips, my goal here is to kind of show you guys that, in my personal opinion, the Metallicus ecosystem, along with the WebAuth wallet, is one of the best ecosystems to really start to, if you're going to test DeFi out, if you're going to test yield generation strategies out, to choose these wallet providers, WebAuth and Metallicus ecosystem to do it on, because they align with regulatory compliance, which falls into what I said at the very beginning of this call, is that you want to be doing these things with projects and organizations that align with compliance and the regulatory environment. And so what I want you guys to listen to is these people on stage with many more credentials than myself. These people stem from systemically important organizations, banks, financial institutions, or large companies in this space that have millions, if not billions of dollars invested into crypto, tell you guys that not only are institutions interested, but that they lack education right now, and that the environment is changing in such a way for them to get involved and that they're getting excited about these liquid staking primitives and staking primitives to participate in yield generation, right? So just take a second here and listen. This is a gentleman on stage from an event from just 2 months ago. This video only has 39 views, and it's titled The Hunt for Yield, Funds versus Protocols on the Future of On-Chain Returns. Listen to this gentleman here say that institutions are interested, but they need education.
How do you guys see the state of adoption, whether that's on-chain protocol adoption, whether that's from a fund perspective? Where do you see the convergence between crypto native products and traditional financial institutions?
They're interested, but I don't think they know how to do it yet. I think they have no operational support. So you're talking to all of the large scale banks, and once you essentially had like the new government come in the US and basically anoint crypto as like a real asset, they're all interested, but it's an asset that trades 24/7. And so they're either taking incredibly risk averse LTVs, or they're just not touching it because they don't know how. Like they actually can't do a margin call on a Saturday at 2 a.m. Like they just don't have the support.
So the reason why I'm showing you guys that is to show you that organizations that align with financial institutions and have infrastructure built for financial institutions are now putting out documents to teach these institutions about staking and liquid staking, which is again, just showed you the shift in the undertone in the environment around these products, around these solutions, and around institutional abilities to actually onboard into the space. If we come over here, if we go over to LinkedIn, this is from Lido Finance. Lido Finance is obviously, of course, one of the biggest ETH liquid staking platforms, if not the biggest ETH liquid staking platform available. And so this is from 2 days ago on their LinkedIn profile. And it says, as institutions increasingly adopt liquid staking, understanding how to manage liquidity, custody, and risks is essential. This falls in line with what myself and Aqua try to show you guys in the Wealth 28 Club, that you don't need to go out there and risk your digital assets to read documents. This is an entire documented breakdown from a financial organization that provides custody solutions and infrastructure for institutions that released this statement, right? So check this out. This is directly from Fireblocks on their LinkedIn profile from 2 days ago. And it says here, over $100 billion in ETH is staked. Liquid staking is how institutions unlock it. Over Liquid Staking 101, or excuse me, our Liquid Staking Report 101 with insights from Lido Finance and EY, which is a major consulting firm, explores how liquid staking works, its risks, and institutional opportunities that it creates. And then Fireblocks literally put out this entire report. It's according to them, it will take you 31 minutes to read this, so it's very thorough. You can see here the table of contents. This is an entire breakdown from an organization, Fireblocks, that provides institutional custody, trying to teach institutions about liquid staking. So exactly what that gentleman said, keep in mind, he said institutions are interested, but they need education. And now I'm showing you guys physical proof that the people providing infrastructure for institutions are educating institutions. So why would you ignore your education at this point after what I've just shared with you? If you do, again, teach his own, ignore it at your own risk, right?
I mean, the opportunity to learn DeFi right now, side by side with institutions, I mean, that should be a game changer. Hearing this information, you should be pumped up to want to learn this information. You know what I mean? Because it's easily available to learn. You know what I mean? You just got to go and look for it in the right places. But this is, if this ain't a sign to start tapping into DeFi, because I don't know what is,
Well, what this guy's going to say next is another thing you want to definitely tap in. So, because he talks about institutional allocation going from 3% to 30% in altcoins. Yeah, watch this guy's. He blew my mind when he said this. But yeah, so it's like now's not the time to be skeptical, be sidelined, and think that what happened in previous market cycles is the same way that the market landscape is going to be painted in the near future. Things have shifted. We're still in a risk environment where you have to be willing to not only accept the risk, but understand how to manage it properly. And if you can get past that fear-based mindset of, oh my gosh, everything's a scam, and you really start to pick apart the weeds and you really understand that there are protocols, there are projects that align with regulation and that are partnered with some of the largest organizations in the game, and you just focus on that, it's relatively easy to mitigate risk in DeFi, if I'm being completely honest. I mean, myself, you, and Kev, the DeFi mentors in the Wealth 28 Club, we took a couple of hits, pretty big major hits at the beginning of Wealth 28, but I feel like the last 6 to 8 months have been pretty smooth sailing, if you ask me.
Yeah, facts. Super facts, bro.
All right. So this is a gentleman here on stage, and what he goes on to talk about is how they're in the process of, educating institutions. That's what they believe needs to happen. And when that takes place, we could see the landscape transition from a 3% allocation into crypto, Bitcoin, and altcoins to a 30% allocation. So this again just aligns with what the gentleman from Kraken said about the opportunity that lies ahead of a 100 to 1000x opportunity compared to where we're at in the landscape today. So just take a second here and listen.
A breakdown at this point of subsectors of crypto strategies. I think we don't know the answer to that, but I think I want you guys to point to how investors in your conversations, not how you want them to look at it, but in your conversations, how they actually look at it.
Yeah, I mean, to start off, there's just education at the ground level. I think they know what Bitcoin is, store of value. Then you have Ethereum, but beyond kind of getting exposure to publicly available products like the ETFs, it gets more difficult, right? So you have to kind of educate them on how do you tier this out. And I think a really good product is that index fund. You get that basket of different products that you have exposure to. And the way I look at it, like a Polkadot, it's an infrastructure play, right? I think when Gavin built this solution, he built it because it solves what Ethereum could not. And this is scale, this is throughput, and this is governance and security. So I think about, as you look at these asset classes that you want to get exposure to, you think about what it can offer and how you think about positioning that exposure. We're talking to RIA firms and everything, and you can look, Rick Edelman would always say, hey, you should allocate 3% of your portfolio to cryptocurrency, and now that is moving to 30%. Now, predominantly, I'd expect most of that to be in a Bitcoin exposure position. But as we educate institutions and end users on, like I said, these asset classes, we can start to see that trickle down effect into altcoins, which are these more technologies that people get a better understanding. And as everything moves on chain, people will need to understand how these all play a role in the ecosystem.
So you have a gentleman here with institutional credentials telling you guys that they're talking to firms, and it's gaining them confidence to move from 3% allocation to 30% allocation. And he didn't just mention Bitcoin, he mentioned altcoins. What are you going to say, Aqua?
That's a massive move. That's a massive move. And did you see what it said on the backdrop on the banner?
No, I didn't. What did it say?
Take it back, run it back. It said something like yield on digital assets or something like, yo, this is so like, hey, this is what we're talking about. You know what I mean? Which is DeFi basically. But hold on, where is it at? It showed the backdrop when the other guy was speaking.
Oh yeah, it's institutional yield on digital assets and all caps.
Yeah.
So this next video clip is a gentleman. He's not a gentleman. He is the CEO of Anchorage Digital. For those of you all who don't know who Anchorage Digital is, I did a video breakdown on them the other day. Long story short, institutional custodial provider, has so many regulated credentials. I'm not going to get into that. Don't fade what Anchorage Digital says. I'm pretty sure they're one of the biggest, if not the biggest, custodial providers for institutions or for institutional custodial solutions in the space. But here's the CEO on the same panel, and he's talking about exactly what I said to you guys when I introduced today's podcast. He goes on to talk about how we are at this moment where we're starting to see it's not going to be TradFi, overpowers DeFi or DeFi overpowers TradFi. It's going to be the merger of the two. So just take a second here and get that perspective directly from an individual with massive credentials in this space.
BNY is probably the best example of adopting technology for the entire history of banking within America. And so this question of is TradFi going to break down the walls between DeFi? I think these two converge over time. TradFi becomes DeFi, DeFi becomes TradFi.
Right. So very simplistic. That's coming from an individual's perspective that actually has valid credentials. He's not just some influencer in the space. Dude is the CEO of one of the largest custodial providers for institutional custody in crypto. And he's like, yeah, it's not going to be TradFi overpowers DeFi or DeFi the other way. It's going to be a merger of the two. And we're seeing that in real time. And so now is not the time to ignore this. Then last but not least, we have another gentleman on stage in the same panel where he goes on to talk about how institutions are excited about these yield opportunities. All right. So keep that in mind now that we've shown you guys that there is education out there for these institutions to start to get involved with these products directly from Fireblocks themselves. And so what do you think is going to happen? I've shown you guys now that the regulatory undertone around the SEC has completely shifted. almost can say with 100% certainty that once there is written clarity, DeFi is going to be a top performing niche in crypto. Like the DeFi niche and altcoins that are heavily related in the DeFi ecosystem are going to be top performers once institutions can onboard into the space with in a regulatory compliant environment, right? So listen to what this dude here says about institutions being excited about yield.
We're built by crypto natives for crypto natives. It's really the domain of crypto natives. We built it for ourselves. I'm kind of client number one. And it's been a significant surprise to see institutions get excited about DeFi yield. It's not something that in DeFi summer 2020, like it was a complete unimaginable.
They didn't buy
thing.
yam farm.
That,
It wasn't
yeah,
a thing.
yeah,
for them.
anybody
Yeah.
farming yams
Yeah.
never expected that BlackRock would get excited about this. But again, remaining open-minded over time, and these institutions are smart, and ultimately they're chasing alpha, and they see that this can outperform other opportunities over time, and so it's.
So how do they view your strategies for themselves? Is it you are a lower risk kind of opportunity
Yeah, so
set?
in our case, where we've got the insurance and all the risk management and now 4 years of track record, it's a little bit of a different conversation. For a long time, the way that it was viewed by, say, larger capital pools, so maybe not institutions, but significant family offices, was they would have ETH or they would have Bitcoin, and they would have some underlying stake yield. So they'd be a client at Figment, and that would be 80% of their exposure. And then they'd go and with 10 or 20% of their exposure, put it with us, right? And if you take, say, ETH at 2.75 and our ETH yielding returns over the course of the last year at 14.2, and you combine that in 80-20, comes out to about 5.5. That becomes really compelling for the person who is sitting on ETH. They're not going to sell that ETH, and that blended amount allows them to take a better risk-adjusted approach to compounding.
He basically said that DeFi is going to rule because they're going to eventually see, these institutions are going to eventually see that DeFi strategies are going to outperform whatever strategies they've been doing, right? And once that happens, that's when we're going to see even more than a 30% allocation. But yeah,
it's going to get to the point where we're going to enter into an environment, if we're not already entering into one, which we probably most likely are, but where the institutions, the banks, the private family offices, the hedge funds, the asset managers that don't participate in these higher yielding products and assets, they're going to risk falling behind in terms of competition. It's that simple. And so what does that mean? That means that in the near future, if you're not doing it, offering these solutions to your clients or participating in these services yourself, you're going to risk falling behind on that competitive curve. And it's simple. It's as simple as it gets. And so think about that in terms of retail. We say this all the time. The people between now and 2030 that participate in DeFi, learn how to yield, learn how to lend, learn how to borrow, learn how to liquid stake, farm, vault, loop strategies, all these things between now and 2030 are going to be the ones sitting on a 10x portfolio without the market even having to 10x. It's just yield. It's just yield. You don't need a bull run to make money in crypto if you know how to DeFi.
Facts. And then eventually too, we're going to, because we've talked about it before, especially at the beginning of the year, we spoke about AI agents a lot. And as those start to get polished and get better with, setting them up, and, some of them start becoming really, really successful, we could really adopt that AI agent in the future to run our DeFi portfolio like we've been saying. You know what I mean? So,
yeah. This guy right here, Thomas Hume, I'm probably butchering his name. The volume on this video, by the way, is relatively low, and I noticed that Thomas didn't have a mic during this interview, but he is the CCO of the Jito Foundation. And I want you guys to listen here to what he says about how, pretty much what I just read to you guys about the SEC greenlighting liquid staking and what this means for the environment. But the real focus is when he goes on to say that the SEC no longer is the overseer for the regulation around staking and liquid staking, and that they clarified that falls under the jurisdiction of the CFTC. That's important because then we're going to listen to a representative. Her name is Sandy Koal. And if we go down and we look at her credentials, she is a co-chair of the Digital Asset Subcommittee at the CFTC. She's also a board member actively at the Digital Assets Advisory Board of the DTCC. She's also a board member of the Digital Asset Advisory Board actively at the World Economic Forum. Like, her credentials go so insane. And she also sits right now as the executive vice president, head of innovation at Franklin Templeton. You know, so yeah, this lady's stacked, bro.
Yo, her credentials are stackety stacked.
Stacked. Woo! And what she says is that in this clip that I'm going to play for you guys, that we're headed into a wallet-based environment and we're shifting away from an account-based environment. And then I'm going to play a video clip of a gentleman who talks about how institutions are going to onboard into the DeFi ecosystem through regulated custodial providers and through regulated wallets. And then that's going to lead us into the Metallicus ecosystem and WebAuth. All right. So to full circle all this, to give you a preview into what it is, the next couple of video clips I'm going to play, as always, giving you guys that juice. So let's listen to this guy here, Thomas where I said, if you're not paying attention to liquid staking and how fast institutional money is going to pour into these products once the infrastructure and regs are clear and in place, you should be, right? So this video breakdown is from like 3 days ago, maybe 4 days ago. And I think it's on the Blocks YouTube. So shout out to the Block for this clip right here. But yeah, listen to what he says. I apologize. You're going to have to turn up your volume a little bit because it's low. Thomas here doesn't have a mic. So listen to what he says.
Yeah, so I can speak a little bit to this because I think that the not only was the SEC guidance important, but Commissioner Peirce also, thought it useful to submit a follow-on statement, which he called the staking sequel, and describes liquid staking as a new solution to an old problem. As Lucas was kind of referring to, there is this situation where you can post assets on the network, which helps to ensure the security of the network, but it does kind of tie up these assets. And so liquid staking can be seen as like, how do you liberate or how do you use or transfer ownership or possession of assets that are actually hard to transact in? And one good example of in today's society is like gold. If you trade spot gold with a bank, what you're actually doing is you're trading receipts. You don't actually have to physically move gold from one location to another. And so the use of gold kind of receipts is the way to kind of liberate some of these assets. And so by providing some clarity on liquid staking, what the SEC has done is actually very, very monumental, but for very narrow kind of pockets of market participants. And so for some of the impacts of this is very substantial in the fact that like US firms or US persons can now contemplate the trading of liquid staking tokens without worry of prosecution that they're trading in some form of unregistered securities. And if you look at prosecution over the last few years, you can see that there's a number of large, high-profile firms that have been prosecuted for trading unregistered securities. And so by removing that kind of overhang, we've actually seen a lot of US firms who have been reluctant to trade liquid staking tokens now being able to contemplate it. Another example is exchanges. So if you look at a lot of the prosecutions over the years, it's with exchanges listing unregistered securities. And so now exchanges can list liquid staking tokens without having to worry about prosecutions in the same way that, in the same vein, DeFi protocols can now integrate liquid staking tokens without worry that, a regulator is going to come knock on their door. Another big impact is on custodians. If you're trading securities, you have to custody your assets with a qualified custodian. Now you can custody there's a lot more flexibility in who you custody with. Another big thing with the clarification is that the SEC has actually ceded regulatory authority over these products. Like the SEC is responsible for oversight of securities, and this actually puts liquid staking tokens under the aegis of the CFTC. And there's a lot of regulatory burdens on securities. There's like registration, there's listing requirements, there's ongoing regulatory.
Okay, so two key takeaways is he said there's a lot more breathing room now as to where these institutions can custody their digital assets, and that now liquid staking and staking falls under the jurisdiction of the supervisory of the CFTC. Okay, so take that into consideration via Sandy Koal's credentials, who is a co-chair digital asset subcommittee member of the CFTC. So you can assume she's probably sitting in on these freaking, subcommittee board closed door meetings, and listen to what she says in this panel discussion on how we're transitioning from this account-based infrastructure to this wallet-based infrastructure. And then take into consideration what that guy said about how now where institutions custody their crypto assets is expanded. It's not just, they have to have some custodial provider. They can do it in anybody that's pretty much regulated and aligned with regulatory compliance, whether it's a wallet or it's an institutional custodial provider, right? That's going to play an important role when we go and we read the WebAuth docs, right? So just take a second and listen to what Sandy Call says.
Right, underlying it all is a really foundational change that people need to wrap their minds around. And that is, for the last 50 years, we have been having an account-driven system. So you and I, we probably have a checking account, a savings account, a brokerage account, a retirement account, maybe an investing account around that. We have lots of different accounts. We're moving away from the account-based world to a wallet-based world, where we're going to have one wallet. That wallet is going to be able to contain all of our assets. It's going to contain the digital forms of money that we spend. It's going to contain the digital investments that we hold. It's going to hold our digital identity document. It's going to hold digital copies of the titles to the insurance policies and assets we own, right? It's going to really be the foundational piece of financial architecture for our lives. And all those things you mentioned, right? The stable coins are putting the cash into the new wallet-based ecosystem. Tokenized money market funds are putting the savings accounts into the wallet-based system. Now we're seeing tokenized stocks and bonds putting the investments into the wallet-based system. So this is what I mean by the migration. These feel like a lot of different things happening at once, but if you look at the underlying theme that ties them together, it's that we're starting to see the assets move away from the account-based to a wallet-based ecosystem.
Go ahead, bro. Take it away, because I saw you almost jump out of your chair.
Man, I mean, what she broke down right now describes WebAuth wallet to the T. And having one wallet with the WebAuth wallet is more than possible, because I'm going to keep saying this. The WebAuth wallet is open source. It's a white labelable. So XYZ credit union can come and put their name on this wallet. Hell, Franklin Templeton can adopt the WebAuth wallet, and it's going to be the WebAuth wallet, but it's going to be in the name of Franklin Templeton digital wallet, right? So like this is massive. And then when she spoke about identity, the identity's super intertwined into the WebAuth wallet. You have to KYC to even get this wallet, right? And that's what Marshall was always, preaching about in so many different, podcasts these past few years, as far as, nobody wants to have all of their personal information out there. And nobody wants to continuously, go to this platform and this website and put up all their personal information. No, your personal information will be in this wallet. And whenever you connect the wallet, it basically will share that information. And, there's more intricacies on how it protects the information. But this is something that Marshall already did years ago. And he has a patent on this wallet too, which is another incredible thing to know about,
Bro. One of our researchers yesterday on your private Zoom call, when you did your DeFi call with the community, said it perfect. Like, people are so focused on the price appreciation of these assets, and like that's their only focus. Like, I'm going to buy this, hold it, and then win long term. But there's so much more that you have to educate yourself on in between now and then to make it. Like, in choosing a wallet that is compliant, aligns with regulatory, the regulatory environment. And then that also gives you the opportunity to participate in all of these yielding opportunities from now until 2030, or just whenever. You like, if you're not okay, do you guys remember? I don't know if you remember this, Aqua, but I know I do. And you're a couple of years older than me, but I remember when computers were put in classrooms for the first time, and what did they do? They put us through like typing classes, and everybody was like, I remember they were like, why are we doing this? Who cares? And I remember sitting there and ignoring it and trying not to learn how to type. But then fast forward, when I went into like middle school and grade school, everybody was using computers, and the people that learned how to type were getting their homework done fast as shit. They were getting their stuff done fast as shit. And I was sitting there doing the like little finger typing and whatnot, because I ignored all the classes about typing. Well, it's the same way. It's like, this is the same thing that we're seeing right now. It's like all the people that download the WebAuth wallet and know how to send a transaction and know how to participate in DeFi and know how to authenticate and KYC. It's like, boom, it's like easy money. You don't
Bro,
want to.
that is a great analogy. I just want to say that is the perfect analogy.
Yeah, and then the people that ignore it, because there are those naysayers out there for no reason, because they're just skeptics and can't read a document. Those are going to be the people that sadly lag in this digital transformation, this freaking fourth industrial revolution, this wealth transformation, when the opportunity is literally like bro, we have never been alive in a moment in history where the elites are literally like, they have a gold bar for us and they're like, here you go. And it's this right here, y'all. It's this right here. It's this. You're muted.
I was saying that there's so many distractions on this thing though too, that keeps people away from the gems of information. So you got to be, there's so much that has to happen for you to get to this information continuously over, you know what I mean? Over and over and over. You gotta really be a consistent human being that's on your A game, in my opinion.
It's facts. And if you're not, you're going to get distracted. You got to be able to separate at this moment in time, the entertainment from the education. That's the biggest discernment right now, is if you can separate the entertainment from the education, you will most likely make it on top between now and 2030. If you're not already on top, right? If you don't, and you instead fixate your attention on all the people that were trying to tell you that, in August, XRP was going to be freaking $1,000. Look now, where, and they're going to keep doing it to you guys. They're going to keep doing it to you. They're going to keep feeding you that hopium and dopamine and this and that. Meanwhile, the people that really buckle, focus down, and friggin' pay attention and lock in, man, bags are going to be flipped. I'm telling you guys right now, you don't need no bull market cycle to make money in this space. You just need education. So listen to this guy here, because we kind of don't want to get off topic, because I want to roll into what the WebAuth, or what the document from Metallica says from the Q2 report that they put out in August. But this gentleman here goes on to solidify everything that I've showed you so far about how institutions, keep in mind, the guy sitting next to him said that institutions are interested in DeFi, but they need education. This guy goes on to confirm that they're going to do this. They're going to onboard into DeFi through a custodial provider or through a wallet. He specifically says a wallet. And then the gentleman in the white long sleeve t-shirt next to him talks about how everybody's going to be earning yield in the future, even if it's a small sliver of it, and that it's going to benefit their family and their way of life. So just take a second and listen to what these two guys here say on stage.
I'll double down on that. And if you look mechanically, the access point to crypto for all these funds is still going to be through a custodian or through a wallet. So then it also depends on the custodian's ability to, it's still going to be, and if you look mechanically, the access point to crypto for all these funds is still going to be through a custodian or through a wallet.
The access point for all these institutions is going to be through a custodial provider or through a wallet, right?
Then it also depends on the custodian's ability to integrate natively within DeFi or create this robust infrastructure to trust minimized way to access the yield if that's the play that they're trying to do. So yes, there's the regulatory component, there's the risk frameworks that they have to align in what DeFi looks like versus how they communicate to their LPs, but then also the underlying custodial structure and wallets that they use.
I think you're already seeing it. TradFi is starting to do it through acquisition. I think that's going to be the path for them. There have been, we had our first as an industry $1 billion plus acquisition 6 months ago. Now there have been several. So I think you're going to see TradFi get in through acquisition.
Got it. And like, if you guys were to project forward, maybe if we look forward 3 to 5 years, where do you think this intersection sits? Obviously today, largely people are on the sidelines, evaluating the different risks, trying to build the right infrastructure, partner with the right infrastructure providers, or go and acquire certain players across the space, whether that's a prime, the whole gamut. But how do you guys think this plays out in the future?
People are going to protect their interests, their existing businesses, especially TradFi is going to figure out how do I integrate and how do I adopt all of these things in a way that I'm also not cannibalizing their existing revenue streams and their existing sources of value. I think one exciting thing in the next 3 to 5 years about this integration is coming back to what you said, Max, about RWA coming online, because I think yield from RWA combined with these crypto native forms of yield that we talked about is going to grow dramatically in its accessibility, both to people in the US and outside of the US. Worldwide, people are going to have more access to to yield. And that's such a differentiator in wealth creation opportunities, even if it's small. If you look at in the US, half the country that invests and half that don't, those outcomes end up being dramatic for those individuals and families. So to me, the hope is that this integration with TradFi means that really great yielding RWA projects and the high integrity crypto native projects actually have accessibility that becomes a game changer in the personal finances of people who normally only have mobile, they have a mobile phone, but they don't have a real financial wealth services infrastructure around them in their jurisdiction or their community. They now have access to yield, high integrity yield. That's a game changer for people.
Like, dude just dropped the mic. He said exactly what I said a second ago, that the people that participate in yield compared to the population that doesn't is substantial value that you could create for your family.
Yeah. And even what he was saying before he got into that last part, as far as these institutions want to, not cannibalize their business. And what Marshall has built in the Metallicus ecosystem is all the tools that an institution needs to take advantage of having their own blockchain, having their own stable coin, having their own dApps where they have yield opportunities, borrowing and lending. That's all being presented on a silver platter from the Metallicus team to these institutions. I don't see these institutions really acquiring, to be honest with you, unless they're just not educated. I feel like, unless there's something I'm not seeing. I mean, if you're looking at the entire market, okay, who can we acquire? And then you go and sit down with the Metallicus team and they're telling you, well, look, you don't need to acquire anybody. We could just build this for you. I would imagine the cost wouldn't be nearly as much as, acquiring, but that's just my opinion. Who knows? But yeah, that's what I have to say about that.
Yeah. Back to what that guy said about the access point for financial institutions being either custodial solutions or wallets, right? That reminded me about this document from Metallicus, the Q2 2025 quarterly report that was put out at the beginning of August. And if we scroll right down here, I mean, there's so many gems in this, but primary takeaway surrounding that little tiny clip of that guy saying the access point is going to be those two things. Well, right here it says WebAuth wallet integration. We are integrating full metal blockchain wallet functionality into WebAuth. This update will consolidate staking, governance, and transaction tools all into a unified interface, streamline workflows, and enhance usability for both institutional and individual users.
That's massive. That's massive, bro. Institution, that the key word, and I love how they put institutional first right there as well. That is the key word. So that means the WebAuth wallet, the same wallet that I use, you use, everybody on this live uses, the WebAuth wallet will be available for these institutions. And we know how smooth this wallet is for us. Yo, massive, massive.
Aligning with, since we're on the topic of Marshall Hayner, aligning with what the gentleman on stage said about how these individuals, are going to be able to utilize these yielding products to benefit their family and the people that take advantage with their mobile phone. He specifically said he pretended to hold up a mobile phone, to take advantage of these yield products directly from their mobile phone. Well, they're going to change everything. It's a huge, what did he say? It's a, matter of fact, I'll just play it back real quick. I'm pretty sure he said it's a game changer.
Yeah. Right? Means that really great yielding RWA projects and the high integrity crypto native projects actually have accessibility that becomes a game changer in the personal finances of people who normally only have mobile, they have a mobile phone, but they don't have a real financial wealth services infrastructure around them in their jurisdiction or their community. They now have access to yield, high integrity yield. That's a game changer for people.
Yeah.
So that reminds me of something that Marshall Hayner put out just yesterday, where Marshall Hayner here said, "My purpose in life is to teach people to fish, to teach them to mine their own metal, to become a Metallicus. And when you do begin to yield an abundance of metal, that you share that with your family and those who have not mastered the ability." Yo, I feel like Mario, this dude is sitting like this, just chilling, bro.
Bro. Yeah, I love what he said. My comment is right underneath it. I said, I'll be teaching my offspring about this ecosystem. Thank you for this opportunity, Marshall. And he liked it too. So Yeah, thank you for this beautiful ecosystem, Marshall. We really appreciate you, bro.
It's wild, man. It's wild, the stuff that people are ignoring. And then I think that I'm pretty sure this is one of our CyPRX Wealth 28 Club members, but they went on to say, in response to that, legitimately mind blown by this ecosystem. Great to know. Thank you. 100% real use case from today. My wife is doing a home birth and I needed $7,000 to pay our balance as she's due any day now. And I legitimately just borrowed against my XRP, XMT, and XPR that I have deposited as collateral, transferred to my bank, ready to roll. No crypto sold. While then paying that loan off with my daily income from farming pools and lending rewards. Freedom tastes sweet. Yo, this is anybody that is like thinking about selling their crypto for fiat is sleeping, bro. This is, and the best. Go ahead. What are you going to say?
Sleeping. I mean, the game plan is right there. He's going to pay it back with the yield. And the yield is so lovely in this ecosystem. There's so many opportunities to earn a nice yield that I am not mad at this entire game plan. This is shout out to Sean Sweeney.
You know, and this is literally word for word talk about in the Well 28 Club, just having this awareness that this is possible. And all these people that are like, oh my gosh, especially honestly, bro, I think that these influencers now at this point with the high end count in any community, doesn't have to be XRP, but XRP for some reason, since I've created a lot of XRP content, seems to be the cancer of the space around price predictions. These people that are like, yo, $100 XRP, we're going to sell it and you're going to be able to get back in at a pullback. Yo, they are a cancer and you should unfollow them, because anybody that sells a utility asset for fiat, they're not doing enough research. At a minimum, if you are going to sell some of your crypto for profit, maybe some stable coins to put into a yielding opportunity to generate yield on stables. But come on now, this guy, Sean, shout out to Sean. I see him in the comments. This is nutso right here. This is living, breathing proof. This is the future. And anybody that is not doing this is, again, they risk falling behind. You risk taking too much. What's the word I'm looking for? Speculative risk, where you think that the market's going to react the same way that it has the past 16 years in crypto. So you're going to sell because some influencer is going to tell you, oh my gosh, we're about to enter into a bear market. And you're going to think you're going to be able to get back in and build your position bigger by selling for fiat and then re-putting that fiat back into the crypto market. And who knows if that opportunity is going to come once institutions come flooding in with billions and trillions of dollars. When instead,
if you think there's going to be a bear market with trillions of dollars coming in at the same time, you've lost your mind. You've lost your mind.
I mean, I personally am not going to sit here and say that I don't think there aren't going to be any more bear markets, because I think there are, but I think that we're about to see an extended bull cycle for quite some time. But at least between now and maybe like 2028, 2020, end of 2027 timeframe, we're about to see over the next 2 years. Like, think about it. For the first time ever, politicians that were never aligned with crypto are aligned with crypto. Governments that were never aligned with crypto are aligned with crypto. Regulations that were never aligned with crypto are now aligned with crypto. Institutions that would never even fucking touch crypto are now on stage talking about, yo, I'm touching crypto.
And they're having FOMO. Let's not forget that. The institutions are having FOMO right now. So,
man, it's just wild, people. Y'all got to just really wake up and just lock in, because now, you know, those influencers that were like, oh, you don't mess this up. Don't mess this opportunity up. They're the same influencers that are about to mess the opportunity up for people, because they still have this 2021, 2022, I'm going to sell for fiat mindset. When in reality, your goal should be to stay in Web3. Your goal should be to stay and keep your wealth digital and expand it in the digital ecosystem, whether that's through tokenization of real world asset, yield generation through DeFi participation, lending, borrowing, so on and so forth, not selling for fiat and putting the money back into your bank account. Like this individual here, Sean did. He needed fiat. He needed fiat. So what did he do? He lent out his utility assets. He held on to that utility, borrowed against that utility, paid himself, and then with the yield that he's earning from all of that process, he's going to pay back that loan. And the best part is about Sean's strategy here is the lent out assets are earning yield the entire time. So when he gets those assets back, they're most likely not only going to be of higher value because of price appreciation, but also yielding the entire time.
Facts. He just said something. What did he say?
Imagine if you knew the government was going to build an interstate system when the first vehicle was created and you had a friend in the transportation department who saw they were going to use asphalt as you bought asphalt and got to get paid every time someone drove over it. That's the opportunity we have now.
Hey, great analogy, bro. I love it.
Yeah, it's wild time to be alive. So I'll do an intermission right there because we got some people in the tab that are saying, you know, we want to learn this stuff. Where can you go to do so? If you want to tap in with our community, again, we're not sitting here saying that our community at the end of the day is the one and only, because it's not. There's some other reputable communities out there. But if you want a community that has never sat there and misled people or tried to get people to believe in something that is freaking outrageous and unrealistic, lock in with us here in the Wealth 28 Club, right? You guys can head over to CYPRXtrading.com, try it out for a month, right? At the end of the day, it's a subscription membership. So if you guys don't learn anything, which I can 110% confirm you will, then you can always cancel your subscription, but lock in with us, learn this stuff. You don't need to risk your crypto to learn about DeFi. Tap in, watch us risk our hard-earned digital assets on protocols, on wallets, testing different things out. So that way you guys can soak up this information and do exactly what Sean just did in the Metallicus ecosystem, which is mind-blowing, right? That actually leads me, since we're on the topic of the CYPRX Wealth 28 Club, man, Aqua, bro. This is mind-blowing, this post that I put out. So I said here, CYPRX Wealth 28 Club, March through May 2024, because that's when we really started to buckle down and record a lot of the Wealth 28 Club content. We recorded 65% of the Wealth 28 Club University content on Aerodrome. We chose to use this protocol to educate people on DeFi because we did our homework and realized the long-term potential. Fast forward almost a year later now, Aerodrome is at the forefront because it isn't just another DEX, it's the anchor venue for institutional grade assets, deep liquidity, and composability. And so what was just announced from Aerodrome, and just you can see here, this is the first video that I posted from May 28th, 2024 about the Wealth 28 Club, just to show you guys some historical timestamps. Well, now fast forward to today, Aerodrome just posted this. Freely transferable real-world assets bring institutional grade yield, full DeFi integration, transparent asset management. The future of institutional yield is here, and it's now live on Aerodrome. And I'd say that the vast majority of the content teaching people just about DeFi in general, how to connect to a protocol, what a protocol is, different yield strategies we've recorded on this platform. Now look at them. This is huge. This is crazy confirmation that what we're teaching here just materializes at such a not only rapid pace, but that we're locked in and aligned with projects that are actually doing big things in this space. So August 20th, 2025, Aerodrome, $1 billion plus in TVL, the largest DEX on base, regularly handling more volume than every other DEX on the network combined. Now, it's the primary chain venue for DE real-world asset trading with deep liquidity and native incentives from day one. Now, I'm not going to thoroughly read through all of this because I don't want to bore you guys to death that aren't too familiar with DeFi. But long story short, this partnership announcement, Centrifuge, bringing DE real-world assets to millions on the EVM, it reads, Centrifuge, the leading platform for tokenized real-world assets, today announced that DERWA tokens are now live on Aerodrome, one of the largest decentralized exchanges in the EVM ecosystem. This launch makes DERWA accessible to tens of millions of users through Coinbase's decentralized exchange trading platform, OKX Wallet, BitGet Wallet, and Morpho lending market, placing tokenized real-world assets into venues where people trade daily, swap, lend, and allocate capital. Then the last two highlights here, it says, on-chain liquidity is going to be anchored on Aerodrome, the leading DEX on base with over $1 billion of TVL, providing deep trading markets and native incentives for swaps. Aerodrome co-founder Alex Cutler said, until now, base liquidity has been dominated by DeFi native assets. DERWA from Centrifuge changes that, introducing institutional grade assets with stablecoin yields natively integrated into DeFi. This is huge news. It just goes to show another major institutional grade announcement in the DeFi ecosystem, showing the maturation of DeFi in this space.
Yeah, this is massive, man. We picked some winners over here. I think what was Aerodrome sitting at too when we were talking about it during this time? I think it was like at 40 cents or something like that, huh?
Yeah, I don't even if you go into the Discord, you can see here Sunday, June 22nd at 9:13 a.m. I was telling people to hop into Aerodrome at 68 cents. Then if you go back a little bit further in time, this is from April 7th, 2025. In the Discord, I was telling people to get into Aerodrome at 29 cents, 20 cents even active. And if you go look at the charts, the charts don't freaking lie. Price action is substantially increased. Now Aerodrome's trading at $1.42. We were getting into Aerodrome at 20 cents.
Dang. Yeah. Your call outs are,
everybody's focused though on price appreciation, but nobody wants to find the projects that are actually doing crazy things in this space to make money. It's like they just want to hold and wait instead of be active. You gotta be active. It's time to be active, not just hodl. The hodl mindset is dead, y'all. Active mindset is what's going to get you there. Being active.
Yeah.
But outside of that, Aqua, I think that for today's presentation, realistically speaking, that's all that I had. I did want to do a quick shout out to the Snipverse ecosystem, right? I'm out there earning on my posts. If you guys are influencers out there, go take a look at Snipverse, built on the XPR network, literally earning in real time on your posts. I'm not trying to shill it to you guys, but this is pretty crazy. And my firm belief, once everybody that is an influencer on X realizes that they can get paid in real time from day one on all of their posts. Like I literally posted a YouTube video of somebody else's YouTube video today, and I've already earned almost 2 cents on it. So
yeah. I'm not mad at Snipverse.
Dude, the Metallicus ecosystem, thank you so much, bro, for putting me onto the Metallicus ecosystem. And your call outs, bro, you've called out over thousands of percentages on the Metallicus ecosystem, just putting people on loan,
Yeah. And there's, still a good time to get in too right now. It's going to go so much more higher.
I can't stress enough, now is not the time to avoid any of the stuff that we talked about in today's video breakdown. So with that being said, I think I'll cut it there. We've been on the live for an hour now. This is a great Friday podcast. Lots of gems, lots of juice for you guys. If you want to know where to find us, head over to CYPRXtrading.com, tap in with us, try out our services for a month. You can always cancel your subscription, whether it's the Well 28 Club or the Discord. Lock in with us, guys. If you're here for DeFi, you want to learn, you want to grow, you want to educate, you want to really see, work in your portfolio, and you want to not just sit around and wait for all these hopium price targets to come into fruition, all these influencers always shilling you guys, come tap in with us. If you guys want access to real research, real analytics, real institutional deltas and order flow, head over to CYPRXtrading.com, lock in with the Discord. You guys have the CYPRX research community, always dropping fundamentals that never reach the mainstream. All these panel discussions that we share on these podcasts, there's thousands of them inside the CYPRX Discord that never reach the mainstream. People are always trying to figure out how to find gems. People are always trying to figure out how to find research. The CYPRX Discord is literally a Google. It's like a friggin' research Google infrastructure for crypto research. The biggest freaking content based of PDFs of institutional panel discussions, all updated information. Lock in with us. Plus, you get access to Aqua's DeFi Zoom recordings and calls, our DeFi mentor Kev's DeFi calls, my fundamental calls all throughout the week, DeFi reports, fundamental reports. It's a great community and a great time to be alive. Outside of that, that's all I have for you guys. Many blessings to you all. Enjoy your weekend. Aqua, if you got anything for the people.
No, I'm good. Much love to everybody. Thank you for tapping in with us as always.
Yeah, great stuff. Blessings to you guys. Everybody take it easy. If you're listening to this as a recording, smash that thumbs up button and subscribe. We do appreciate the love and the support, and we'll see you guys next Friday.